KOSPI, negative 4.47%. The liquidation signal is activated. All right, let's get right to it. Bottom line up front. A value at risk, or VAR, driven liquidation in the Korean session just confirmed that a deleveraging feedback loop is live. And what that means for us is that the Nasdaq's 24,000 structural pivot is now under immediate threat for the US Open. Let's be absolutely clear about this number. Negative 4.47%. This isn't just market noise. This is a structural signal. It's telling us that institutional deleveraging is happening right now. So let's deconstruct the mechanism here. We need to understand why this is happening, because this isn't just some random panic selling. Nope, it's automated, and it is entirely systematic. The engine driving this whole thing is something called value at risk, VAR. Think of it as a tripwire for big institutions. It's a risk model that forces them to dump their most liquid assets, we're talking large cap tech, the second their portfolio volatility spikes. The machine is literally built to create these feedback loops. And here's that loop in action. It's pretty simple, really. Step 1, yields and oil prices spike. Step 2, that trips the VAR models. Step 3, the models automatically sell off liquid assets. Step 4, all that selling, well, it cranks up market volatility, which then, in Step 5, forces the next wave of selling. You see? The loop literally feeds on itself. And these weren't hypotheticals. These are the specific macro catalysts that kicked this machine into high gear. You've got WTI crude spiking to 106.5, the US 10-year hitting 4.318%, and a 12 basis point expansion in the Korean 10-year. These were the inputs that lit the match. So all of this brings us to the Korean market. Right now, it's acting as our canary in the coal mine, and it's giving us crystal clear evidence of systemic stress. Just look at the scale of this drop. The KOSPI is down 4.47%, and it closed right on the daily low. Now, that close is the crucial point here. It signals an almost total lack of buying support. The sellers were in absolute control, no question about it. And here's the confirmation. The dollar-won exchange rate just blew out to 1516.5. This isn't just a simple stock market move, you guys. This is a signal of significant capital fleeing the country, and that's a major, major red flag for liquidity. Now, let's break down the internals really quick. First, domestic institutions dumped 1.45 trillion won. Just gone. Second, market breadth was absolutely catastrophic. We're talking 283 names up versus over 2,400 down. And third is 7.2% short selling ratio in a giant like Samsung. That tells you this wasn't just liquidation. This was active, aggressive short positioning. Okay, but amidst all this carnage, there is a hidden signal. Let's take a look at where the smart money was actually hiding, because this wasn't a total market exit. It was a rotation. I mean, just look at this contrast. On the left, you've got your high beta tech, think semiconductors, getting absolutely liquidated. And on the right, you see capital flowing directly into a defensive key supply chain node. This single visual tells the entire story of a very calculated capital rotation. And the numbers? They confirm it. While the KOSPI was getting hammered, down nearly 4.5%, a key defense node, Hanwha Aerospace, saw a signal activation of plus 6.3%. This is the proof. This is a clear strategy in motion. Exit risk, enter safe. So, the big question, how do we translate this into an actionable plan for the US session? This is the execution framework. This is our battle plan. Always remember the rule, do not trade the headline. You trade the supply chain. We've got two key data points that are going to either validate this whole thesis or invalidate it. At 8:30 Eastern, initial jobless claims. If that number comes in low, it reinforces the high-yield environment and adds even more pressure. Then, at 4:30, the Fed balance sheet. If we see contraction there, it verifies the deleveraging loop is still in play. Okay, this all brings us to our tactical pivot. Nasdaq 100 at 24,000. Here's the plan. First, if it breaks below 24,000, you initiate defensive hedges. Your target support is 23,700. Second, if it holds above 24,000, you stay neutral and just monitor the situation. And finally, here's our invalidation condition. If the US 10-year yields stay above 4.38%, all long positions are off the table. Period. The pressure is just too high.
Command mode engaged. Final checklist. Execute with discipline.
Watch the NDX reaction to the 24,000 pivot. Wait for the 8:30 claims data. Confirm the H4.1 data for liquidity. Liquidate high-risk positions by 15:45 Eastern. Log the results at 0630 EST, no exceptions.